Hey, good evening, everyone. Yeah, let's begin. Um, can you guys see the screen and hear me well? If you can, just put a simple emoji, thumbs up, or a wave to say that you can actually see the screen. Otherwise, please ping on the chat so that I can rectify any issues with the display. Okay, I'll begin with the introduction. Okay, today we're going to go through some of the price action for the common pairs, euro dollar, gold, and maybe the S&P. And basically we'll be looking at the New York session for today. My name is Sherman, and I'm an FX strategist. And this webinar is in collaboration with Vantage. So my background is in algorithmic trading. So a lot of the concepts that I will be going through, it's basically more on the systematic side. And all of this, the strategies or signals that I'm gonna give today or gonna go through today, can actually be coded out and be automated. If you guys are interested. So feel free to drop me a message on LinkedIn if you have any questions. So before we begin, I just want to state the disclaimer that any form of trading is a high risk activity. Do ensure that you are aware of the risks that you're taking, and any signals that we'll be talking about today should undergo your own evaluation or a third party kind of evaluation. So do ensure that you fully understand the risk before you make any trading decisions. Okay. Yeah. As we go along, feel free to put in questions on the chat so that I can answer them as we go along. But today, I think before we begin on the charts, I just want to go through this particular slide, which talks about the key indicator that we'll be using. Okay, so the key indicator that I'll be going through, and in fact, a lot of these concepts are very similar to one another. So if you're familiar with ICT concepts, SMC, or even indicators like moving averages, Bollinger Bands, right? All of these will all converge to the same outcome. And basically this, using the pivots, you will be using a very systematic approach to understand where the market is going. And I think the key thing that many people actually struggle with is to find the immediate trend or near-term trend to trade for each session. So I'll be going through a lot of how we can actually identify the trend for the upcoming session or even the upcoming day or upcoming week. Okay. So I'll quickly go through the concepts of pivot points for those who are new to this webinar. For pivot points, they are basically a leading indicator, and each of this set of pivot points are actually based on the previous open, high, low, and close. Okay, they are non-repainting, which means that as price moves, the lines will not readjust or give a misleading signal. There is one pivot line, which is basically the most important line that's in the middle. And there'll be two resistance lines above, R1 and R2, and two support lines below, S1 and S2. And in between all of these major lines are the middle lines, M1, M2, M3, and M4. Okay, at the beginning of each session, right, we'll usually begin, the prices will usually be range bound between M2 and M3. Okay, so for us to actually identify the near-term trend for each of this pivot point, we need to understand where prices fit in from S2 to R2. Okay, so 80% to 90% of the time, prices fall within S2 and R2, and usually we term that kind of like a normal price is falling within a normal range, right? So 80% to 90% of the time, it falls from S2 to R2. And usually the remaining 10 to 20% of the time, prices will fall below S2 or above R2. So once prices breaks above R2 or breaks below S2, that will actually signify our near-term trend, right? Within a given period, M4 and R2 is the resistance. So if we break above this R2 and 4, then this will form a support region. Likewise, if at the start of the period, M1 and S2 will be our support region. And if prices breaks below S2, then it becomes a resistance zone. Right. Another thing to note is the zones between M2 to P, the pivot line. At the start of each period, right, M2 to P is usually the entry for our buys to target M4 R2. And the region from the pivot point to M3 is usually the point where we'll enter sells to target M1 and S2. So first step is always to identify the trend. And then the second step is to trade according to the trend. It doesn't mean that if you start from pivot to M3 and you reach S2, then prices will go further down, right? Like I said, 80 to 90% of the time, prices will rebound. This will become the target for sales, which means that it is a support zone. And so when prices comes to this zone, it will usually react in the reverse direction. Likewise for M4 and R2, if prices will start from M2 and enter M4 to R2, then we will usually see a reversal. But of course, once prices break below, you'll be stopped out, and that will become a change of character, and then we'll be trading in the opposite direction. Okay, so far so good. If there are any questions, feel free to put it on the chat so that I can go through it. So let me just change the screen to the charts, and then we can look at some of the common pairs and how we can actually trade them today. Okay, let me just change the screen on TradingView. Okay, so let's go with Go. Go is somewhat easier. And can you guys see the screen? If you can, just if you can't see the screen, just put it on the chat so that I can readjust the settings. Okay. So again, I'm just gonna remove all maybe before I remove all of these lines, I just want to bring your attention to this platform that we're using. It's called TradingView. It's a free software that you can download. It's available on desktop, mobile, and on web. So it's very convenient. For us today, we're going to use the pivot points. So for us to actually get the pivot points, go under indicators and select type in pivot points, right? There'll be a number of indicators that will help us calculate the pivot point. But the one that I'm using is this one that's called Wayne's pivot. All right. So the special thing about this pivot point is that it highlights the target areas so that we can actually use those for our analysis. Okay. So just a recap on what we have discussed last week. I think our first session, we were somewhere around this area last Wednesday. And if you look at our weekly pivot, right? And again, because of the weekly pivot, right? Last Wednesday, we were somewhere around here, right? And given the big push up from the previous week, we mentioned that the target price for last week would be 1992. Okay, so it kind of it hit our target price and it broke up a little bit higher to 1997. But all's good. We took profit at 1992, so that was kind of like a 700 pip move up. And along the way, we made a bit of adjustments. We talk about the alternative. If it were to break this support, it will go down to the D1 support. But again, prices moved up, and then we were able to hit the target. Okay, so I'm gonna redraw everything again, see what's the plan for this week. So just plainly just looking at the weekly, and again, when you are using the Waves pivot points, you can actually set it to multiple time frames. So what I'll do is I'll actually have 4 instances of this open, but basically you can have one. Select the settings cog under inputs, and the second option under time frame, you can select the time frame that you want. Okay, so we usually start from the higher time frame and then we move down to the hour. Anything lower than the hour, it's a lot of noise, so you will not get a clear analysis. So I will usually stop at the hour, and then basically within the hour, if you can take one trade per hour, you would have already be able to take at least 16 trades a day. So that's more than enough, right? So we start from a week, the weekly, and then we'll move down to the hourly. Okay. So for the weekly pivots, again, because of price closing above our R1 here, this week we will be bullish till prices tell us otherwise. So the bullish entry would be here. Okay, so like I said, M2 to pivot, that's our entry for our buys. Okay, and you can see that prices tapped into this midpoint. Let's readjust this a little bit. Okay, and our target would be somewhere around here. So the target for this week, right, would be 2040. Okay, again, this is another 700 pips, right? Similar to the previous week. Will we get such a momentum? We may not, but basically this signifies that move up to 2040. Okay, so weekly we are bullish, right? So again, when are we not bullish, right? So if back to the point of identifying the trend, okay, so on the week of 25th of September, right, you see that price broke below S2 and it closed below S2, right? So this causes to dictate that trend to be a bearish narrative, okay? So this was our bearish narrative, and we were bearish even in the following week, 2nd of October, and we were still bearish. Okay, for us to actually turn our narrative to bullish, right, we'll be looking at the R2, right? So come the week of 9th of October, and this was again caused by an event. This was caused by the Israeli-Palestine war, and gold shot up as an alternative to the dollar, right? And so as price broke above, what we were waiting for at the end of the week was for price to close above R2, right? So usually when price breaks above R2, this becomes a resistance turn support zone, and basically we'll tap this and we'll be moving up. This would have become our resistance zone, but price broke above, and so this sometime down the road, this weekly zone will be used. Okay, so we'll just kind of extend it over so that we can actually see if we can actually come back to this area. Okay, so price broke above, and then we were full on bullish last week, and then this week again. For us to become bearish, the plan would be that it will have to hit this level, bounce up, and once it breaks below S2 this week, let me just we'll need price to fall below S2 this week. Okay, from here down to S2 and then up, and then we'll be bearish again. Okay, and again, if you're looking at this on the 4-hour time frame, on the weekly time frame, you'll be seeing a bearish engulfing. So this is in line with your candlestick patterns. So you see a lot of this analysis will converge to the same outcome. And so if you were to just stick to one of these indicators for analysis, it basically covers all of the grounds. Okay, so but that's kind of the Frick case incident, right, where gold will depreciate against will lose its value against the dollar. And usually in this kind of scenario, it will probably be like increased interest rates and the end of the war, which is highly improbable. So we'll be still sticking to the bullish trend. Okay, so we already marked out our zones for weekly. Again, if you have any questions, just feel free to ping on the chat so that we can go through them. Yeah, so we already identified the zones for weekly. We do not need this zone any longer because we have this resistance and support zone here. So the only two that we are really interested in would be this and these two zones here, 1953 and 2043. Okay, so once we are done with that, we have the zones. We can go down to the daily, and we can look down. We can go down our candlesticks down to the 15 minutes, so that we can see more detail. Again, this was the target for last week, right? This was the target. And again, the target for last week, this was the weekly target, and this was the daily target on Friday. So they converged, and you would have already predicted this drop because this was the target price. So when a target for buy has been identified and people are getting out of the buys, you would expect a retracement due to profit taking. So those who followed on Wednesday when we were at 1942, which was around here, 1942. This was a TP, 1992 was a TP. Okay, so there was a sort of a break of this structure here. And the idea for the start of this week was that this box here would be our buy entry. Okay, so with that in mind, what happened on Tuesday was that our target entry was here, and it nicely dipped into this area here and pushed it back up. And now we're in this sort of like a flag pattern. And if you follow the flag patterns, you would know what a pattern this would have been, right? So again, the drawing can be subjective, right? But the key thing is to be able to create a flag pattern. I would even say that this might be somewhat of an interest of a flag pattern. And this is basically our bullish flag, right? If you zoom out a little bit, right, this was a bullish flag. And if you calculate the range, basically this move up, when it comes down before it breaks out, this will be the magnitude of it. So it will be about 70 pips. So if I were to use the ruler, right, let's say from the breakout of from this zone up to this zone, right? How can we do this? Okay, so if you were to measure this whole distance up to this point here, right, you can do a direct, and basically you overlap with our weekly zone. So essentially there's a lot of confirmation for a bullish move, right? And right now at this point in time, the bearish move is just to it's a bit far-fetched for us to actually hit to this point. So for the New York session, we can see that this 4-hour block has been created, and we are now in a range. So what happens in this range would be that we'll be looking for, we won't be trading this range because then we'll be caught when price breaks out. We have news tonight for building permits, right? So what we would expect and because we are bullish, it would be something like that. And there'll be two key areas for us to actually buy, right? This area here would be an aggressive buy, and then this area would be our conservative buy. Okay. And so again, we need to understand that this weekly zone, even though it tapped and moved up, right, there might be a case where it breaks below, form a double bottom before it moves up again. Right, so buying at this level is risky, right? Because if the news might push price down, and we would retap into this demand zone again before moving up, so you would be stopped up. So the conservative move would still be for prices to break above this range here, and then wait for it to retest this level before we buy up. And we do not need to be too hasty about buying here, because our target zone is 2040. So there will be many opportunities in the next 3 days to reach our zone at 2042 to be exact. Okay, so this is the idea for gold. We will want price to break above this level here, 1976, and wait for the retest before we move up. Okay, so weekly time frame, we are in a bullish narrative. Okay, on the flag pattern, we are also on a bullish flag pattern. Now we're in a range. We have broken out of this flag pattern. Again, this is subjective. You can draw it in any way you want. This can still be within the zone, but we can just focus on today, M3 to pivot. Prices, for us to be bearish today, prices needs to break below M2 and then retest on M2 before we hit our target zone here. Okay, again, this is the daily pivot. What we need is to break it below M2, retest M2, and then our target will be M1. And this is a setup for an entry for sells. But because the higher time frame tells us that we are bullish on gold, and that is why we are not selling at this point. Okay, the probability of price breaking above this level and retesting this is high. Okay. The alternative is that you sell here. If you're greeting this sells, right, and you're trying to target this level, which is very risky, the next sell that you want to target will be the M4 for today. Target this zone here before it breaks up again. Okay. So again, if you sold here, you'll be in a drawdown. Take the second sell here, and you'll be targeting 1975. And this will be very risky because price might break above M4, the previous high, which is at 1997. Once this is broken, then we are on our way up to 2040. Okay, that's kind of the idea for gold, right? And if you stay on for the next 2 sessions, tomorrow and on Friday, we'll go through this setup again to see how prices have moved and how we can actually play our entries to 2042. Okay, so this will have broke. Let me give you what I think would be a better. Okay, so if what happens is it will most of the time you'll do this, do this, do this, and do this. Okay. This is plan 1. All right. The second plan is that it goes down, takes some liquidity, move up, break down, and up again. And because of this, whenever it crosses above, you can set your limit order with the price just below the lowest point. and our target will be all the way to 2040 as projected by the weekly pivots. This is one. The this is here, right? And then it comes here, move up, then we'll be looking to be taking the price at the same entry, but our stop loss will be slightly tighter, around at the pivot, below the pivot of the next 4 hours block. Okay, and then we work our way up to the weekly. Right? So 2 scenarios here for gold. Okay, we can see some rejection, and again, most of the time, if we can see, I would say this line here would be a high probability setup, right? If we are bullish on gold, the last move, because this is the range that we're in, the last move will not hit the bottom support of the range, right? There's just not enough sellers to get the price down. And if price were to get to this level, then we will really need to see price break above before we enter again. Okay. So if price hits the midpoint here and we see a violent move during the news, right? We can wait for the retest of 1976 before we buy. And if price doesn't reach 1976, then we can plot the entry. We gotta be patient and wait for the price to either touch 1976, or we look at the next projected pivot lines for tomorrow and enter accordingly. Okay, so this is the trading setup for gold tonight. Okay, so I'm just gonna go through quickly. We only have 3 more minutes. I have euro dollar, or we can go as euro dollar is kind of simple. We are waiting for this flag to play out, right? Maybe just go to the 4 hours. Yeah, right. We are in this reversal zone, right? Right. Best case would be that prices dip down to this level, and then we move up again, right? There's a lot of liquidity here. Near-term case would be that price follows this upward trend, this upward channel, and our target entry would be here. Okay. So fundamentals on euro dollar, we do know that there's a high chance that rate hikes will pause for 2023. So we wouldn't see much appreciation of the dollar any further, right? Even if we were to look at DXY, right? We're back in this range. We broke above, right? Yeah, so largely DXY, euro dollar will be based on the expectations of rate hikes in the next couple of sessions. There will be one in November, so that will actually determine where euro dollar will go in the long term. If they pause rate hikes, then we might see prices go up further. But if they continue, the likelihood of them increasing interest rates, it's much lower now since it's already at 5.75. Right, so we'll see. But I want to quickly go through SPY. SPY is very interesting. SPY is our S&P 500. We can do SPY or we can do SPX. They are both the same. But I think we drew something a while back. No, we drew something on SPY. All right, we drew something on SPY. Okay. So yes, so SPY, this was the ideal last week, Wednesday, 18th of October. And we drew these 2 lines. If it broke above the weekly pivot, prices will move up higher. Otherwise, we are aiming for this daily and then this target here, which is our weekly. Again, because all of these are non-repainting, right? So I can just show you guys what it means. So even as price have already created new moves, right? You can see that our target zones are still the same, right? M1 and M2 was last week's target, right? We started M3. We had a break of structure here, so that was why M3 was broken. We needed to fill this gap, right? And so we tapped into this. On 18th of October, we talked about forming a double top and prices coming down to this level. And once broken, it'll retest and hit the weekly target, right? And a key thing to note is that sometimes you're lucky, prices retrace back to this level before it goes down. And if you're a risk taker, you would have taken that trade using a self stop, and then you would have taken this entire move down. Okay, but let's see where we are going this week. Again, because last week's target was hit, right? So where are we looking out for? We will be looking out for M3 down to right. So this is all about trend following, right? So if prices close below at the target zone, what we'll be looking for is M3 sell to M1 or aggressively pivot down to M1. And the last known narrative was a break of S2 and closing below S2. So this entire 4 weeks or 5 weeks will all be in the bearish momentum. So the thing is that if you're running a grid is basically all layered entries, right? So once we know of the narrative, within this entire zone, if you were to keep selling, even if you were to sell at this bottom, right, you will be in profit within the next 3 days, 3 to 4 days. Within the week, you'll be in profit. And even if you were to sell this level here, right, you will sell all the way up to this level, right? By the mid of this week, you would have been break even, and then down here you would have been profitable already. So again, even if you were to sell today, right, you sell up to M3, right, you will still be able to be profitable by the end of the week. Okay, so in what scenario would we change from bearish to bullish, right? That's the question, right? We need to take note that this is the target, and just eyeballing this, right? Is it easier for us to do this, or is it easier for us to do? Is it easier for us to do the blue line up here, or is it easier for us to get up to M3 and sell off? Okay, so a few things to take note of. You have Microsoft and Google coming out with leading the earnings report for last quarter, and it wasn't good, right? So that is a bearish indicator. We have the war, we have increased interest rates, right? So a lot of these fundamentals, it's in line with our bearish narrative, right? So in the rare case that prices do in fact break above this level to above 441, right? We might see that happen if interest rates starts to come down. Earnings, there are better earnings report, right? And overall, we were in this, let's close this quickly, right? There was this huge uptrend starting from the start of this year, March. Yeah. Start of the second quarter of this year, right? And so overall, we're still in an uptrend, just that in the immediate term, we are in this flag pattern. So there is a chance that we are looking at and if I were to do this again, right, the pivot points, just roughly drawing this flag pattern. Again, this is a very long-term analysis, right? And just drawing this flag pattern for us to be bullish using the pivot points, like what I said, we need to break above R2 and retest it, right? And you can see that just by using the pivot points of this current week, right? If it does in fact break R2, it's already breaking out of our flag pattern and we'll be in a bullish momentum, right? So both of these will converge to the same idea, but the idea would still be M3 down, R1 down. Okay. This would still be our high probability setups due to the fact that the most recent narrative is still bearish. Okay, and for us to be bullish, we need to break above this, the last bearish move. Okay, which is the target for this week. The buy target for this week. So all in all, everything is still in line with sells at M3 and R1, right? If you're stacking up your layers, there can be okay, another thing to note is that if prices do in fact hit M4, okay, your target is the pivot point, and you might, if it closes above the pivot for this week, then the next week will be bullish. Okay, so the same thing. You will need to cut your target profit lower if it hits M4. Okay, so that's kind of the idea for SPY. Are these sessions recorded? Yes, these sessions are recorded. It's on the Vantage website, so you can review these setups if you do not have the time to sit in for the live session. Okay, so there'll be a session tomorrow again, 4 o'clock GMT, Singapore time, GMT 8+8, and another one on Friday. We will be going through SPY and gold since we started this week with gold and SPY. And I would like to say that this is an indication that, you know, we are gonna go higher, right? But let's see. As long as prices do not hit this level, I'm very bullish with this. And we can wait till the news, which is in about an hour and a half, and see if prices break above. And once it breaks above, then this will be our limit order, our buy limit orders. And these two orders will be what we'll be taking. So the less aggressive one, 12.2, in fact, you don't really need to, the pivot point is basically the level in which we would not expect price to break below. So anything below this will negate our bullish momentum. What I mean by negate the bullish momentum is that we will relook at the move price action and see if we can take the entry again at our weekly buy entry instead of suffering that drawdown all the way down to this level. That's about 20 pips, right? Yeah, 200 pips. Yeah. So again, we need price to break above 1976.56 before we start looking at our entries. Yeah. And there'll be a lot of time after news. Do not trade at the start of the news. Give it about 30 minutes, 40 minutes, 45 minutes. And if you can get price back down to this level, then we'll take the entry. Okay, so that's all for today. Thank you guys for coming. Feel free to drop me a message on LinkedIn if you have any questions. And I'll see you guys again next week. All right, thank you, and see you again. Bye.